Lesson 10, Revenue. Welcome to a core pillar of financial analysis. A company's financial health always starts with a single line item, revenue. Hello everyone, I'm Professor Matt with the Fundamental Investing Institute. In today's lesson, we're taking a deeper look into the income statement, focusing specifically on the top line. Revenue represents the sales of goods and services. It is a company's only sustainable source of income. Unlike loans, revenue represents value generated from core business operations. Remember that every business transaction affects two or more accounts. Any increase in revenue also affects a corresponding asset account, keeping things balanced. If a sale is made for cash, then the cash account is immediately increased. If a sale is made on account, we have another asset called accounts receivable that increases. So, when a company records revenue, it is receiving payment or an IOU. Either way, revenue is an inflow of value to the company. First, you must identify the contract with the customer and the specific performance obligations. Next, determine the transaction price and allocate it to any separate deliverables. Finally, you only recognize the revenue once those performance obligations are satisfied. The five-step model can look intimidating, but it comes down to two simple questions. First, has the company delivered and has the customer accepted the good or service? And second, is payment from the customer reasonably assured? If yes, you can recognize it. Suppose an electronics retailer sells a computer with a service plan for $1,200 total. Separately, the computer is $1,400 and the plan is $200, totaling $1,600 standalone. The computer is 87.5% of the total, so we allocate $1,050 to it and $150 to the service. As we can see, revenue recognition is all about timing and accuracy. Companies record revenue only when obligations are met and payment is assured. In summary, timing is everything. Recognition depends on fulfilling your specific promises. Always allocate bundled prices and ensure payment is reasonably assured. To learn more, please visit us at fundamentalinvestinginstitute.com. And remember to like and subscribe for more lessons on building your financial foundation. Next time, we'll dive into the next item on the income statement, cost of sales. See you then.